actually started the journey into the forex market for the past, let's say, 8 or 9 years. I started in 2013. That's when I started my learning curve till this day. I've worked with MBA Forex as an instructor. Back then at Tarpot, I was posted to Udo, where I served at least a period of 1 year plus before the saga that happened at the company. So that's so much explanation. Let's go into today's business. So I'll share my screen because I've actually prepared a slide for this presentation. So let me share my screen, then we commence. Thank you. So as you can see from the screen, this is a complete module for what? Level 1. This is just a beginner's introductory class to the forex market. When you hear the word forex, what actually comes to mind is what? Foreign exchange. Foreign exchange. So the short form is forex, but the full meaning or the full form of it is what's called foreign exchange. This is one of the biggest markets in the world with daily turnover of about $5 trillion. I'm not missing words. $5 trillion. It's one of the biggest markets in the world. So it is of a great advantage to do what? To have the knowledge. The knowledge is what? Very, very important. Even in this our present day, where you will graduate from the university and you will spend almost like 5 years looking out for a job. Well, if you can acquire the skill set, you don't need to look for a job anywhere. You are your own what? Your own boss. All you need is what? An internet and a laptop. Then a little fund, which you can do what? Use 10 Trader as what? Your broker, which is one of the best broker out there. So let's proceed. Complete models for what? The level 1. So let's go to the next slide. Introduction to Forex. Just like I said earlier, that Forex simply means what? Foreign exchange. Foreign exchange is one of the biggest markets in the world. To break it down to what? To a layman understanding, to bring it home, Forex simply means the buying and selling of currency. The buying and selling of currency. Two currencies must be involved in the forex market. Two currencies must be involved. Let's take, for instance, you are doing business or a company that is into the manufacturing of mobile phones in US that deals with what? The currency US dollars. But they cannot manufacture the component of the phone all by themselves. They will actually need to what? Buy some accessories or parts to assemble these phones to become what it is. So in other words, if let's say a company A wants to buy the parts or the motherboard of a phone from China or Japan, they don't just carry their dollar and go to China to buy the parts or the mobile motherboard of the phone. What they do is that they need to change from what their dollar to what to yuan or yen, anyone. It depends on which country you want to get. They want to make transactions with. So they have to change their what? Use their dollar to do what? To buy the yuan from Chinese, so that it facilitate them to do what? To be able to purchase the phone accessories that they will use to what? To manufacture their phones. So when they do this, essentially, Forex has taken place. When this whole transaction has been done, Forex has taken place. Then if I want to bring it back home to a level where everybody you understand, let's say in Nigeria, not need of going very far away. Let's say you go to the bureau to change all this malam that normally change money, and you want to change what? Naira to dollar. Let's say you want to buy $100 at the current market. Now the black market price is what? $755 per what? 755 naira per dollar. So let's say you want to buy $100. It is the malam that will determine the price for you. So if the malam said that it's going to sell to you at the rate of $1 towards 755 naira, that means you need almost like 75,000 naira to do what? To purchase $100, if I'm correct with that calculation. So when such transaction is being completed, Forex has taken place. I don't know if it is well understood. Forex has taken place. So basically, that is what the Forex market is. Now, what we do here, or what the Forex market is all about, is buying and selling of different currencies on the internet based on price fluctuations, based on demand and supply of these two currencies. So that is what simply what Forex is all about. So that takes us to our next slide, the history of Forex. The history of Forex. It is good for us to know a little bit history of the market that we are about to trade. So please, I will just go through the basic history, just like what you are seeing on my slide, the history of Forex. Foreign exchange dates back to what? Ancient times, when traders first began exchanging coins from different countries. However, the foreign exchange itself is the newest of the financial methods. In the last 100 years, the foreign exchange has undergone some drastic transformation. Trading volume has increased rapidly over time, especially after the exchange rates were allowed to float freely in 1971. So that is how the Forex market is. Forex market all began afterwards the World War II. The whole world was experiencing so much chaos that the major Western government felt the need to create a system to stabilize the global economy. And that process is known as what the Bretton Woods system. The agreement set the exchange rate of all currencies against gold. All currencies were tagged against gold in this system. This established exchange rates for a while, or a kind of established or stabilized exchange rate for a while. But as the major economies of the world started to change and grow at different speed, the rule of the Bretton Woods system was unable to accommodate them. The whole system became obsolete and limiting. Soon enough, come 1971, the Bretton Woods Agreement was abolished and replaced by a different currency evaluation by the then President Nixon of the US. At first, it was difficult to determine fair exchange rates, but advances in technology and communication eventually made the things easier. Once in the 1990s came along thanks to computer nerds and the booming growth of the internet, this whole thing made what the selfless transactions of what the Forex market. Majorly Forex market was left for the big boys as a them, but the help of what the internet made it easier for us to be able to access the same liquidity as the banks. Formerly, Forex was left for the big banks to do it, to trade. But with the help of experts, nerds, the guys that has brain, the brokers, they were able to do what? Design a nice platform whereby you can buy and sell and make profits. That is why 10 traders are here. They are one of the best traders in Nigeria. That's why we are here. So the brokers made it easy for us to do what? To access the market through the help of what we call leverage. So also know it that in these Forex markets, we have about 4,600 banks participating in it. The big banks are the ones that actually, the interbanks are the ones that actually what? Determine what? The rates. So by the year 2030, the market is speculated to be about 7.3 trillion in growth. With such volume, one can assume that the forex market is extremely volatile, changing at a moment noticed, depending on what conditions within what that country. So this is like a little brief history of what the forex market. So let's go to the next slide. So what is forex? I've actually said what is forex. The basic concept behind the foreign exchange or forex market is for trading currencies, one pair against another. It is the world's largest market, consisting of almost 7 trillion in daily volume and is growing rapidly. So forex market is what? The buying and selling of what? Currency comparison. They majorly based on what? Demand and supply. As we all know that the demand for dollar is higher compared to some other currencies. So when you buy and sell, you have actually what? Participated in the forex market. The value of one currency is determined by its comparison to another currency via the exchange rate. So I believe this is well understood. Forex simply means what? The basic concept behind forex market is what? One currency is what? Traded against another. The dollar is traded against the naira or the vice versa. So that is what it is. Let's go to the next slide. Why trade forex? Why trade forex? We have some enumerated reasons why you should trade forex. Minimal or no commissions, instant execution of market orders, short selling without an uptick, volatility, accessibility, technology, possibilities and opportunities, regulations. can be traded anywhere. Let's start with minimal or no commissions. I bet you in Nigeria of today, if you want to start a business, you will need to do what? To rent a shop. And if you want to get the matter worst, if you're in a place like Port Harcourt, you will first what? Rent a shop. The community boys will come and tell you that, madam, you go pay money for drink money, machigram money. You have to pay for machigram money. Then drinking money. The lawyer will take his own. The agent will take his own. By the end of the day, you will be left with nothing. And you have not talked about the goods you are going to stock with, the kind of business you are about to do, and the goods, the money we use, or the capital you use to start the business. So you can see that this whole process is what? Cumbersome. But in the forex market, my brother and sister, it's not like that. Minimal or no commission. All you do to buy or sell any currency, you will be charged just a small commission. A small commission called what? Spread. That's what the broker will take from you. You don't need a shop. You don't need, and it's what you just need is the knowledge, the skill set. And a broker that will help you to house the money or facilitate you to do what? To buy and sell in the market. The best trader or broker I will recommend you to use is what? The Ep1n trader. They're one of the best brokers in the market. So you see that you don't need anything. You don't need shop. You don't need to pay anybody. You don't need to pay rent or anything. All you just need is the skill set, your laptop, the amount you want to start with to fund the account. And that's all you're good to start. And the internet, you're good to start. That takes us to the second point. Instant execution of market orders. Instant execution of the market orders. In instant execution of the market orders, you don't need to start looking for who will buy or who will sell, because of how enormous the market is. If you want to buy, there's another person already out there that wants to do what? To buy from you, or that want to sell instead. So just by the click of a button, the broker will what? Fill in your order for you. So there's no waiting or wasting time. It's not like the offline markets whereby you will stock your product and you start looking for buyers. Start placing adverts here and there, looking for buyers that will patronize you. In the forex market, it's totally different. All you just need is the skill set, a good broker like Ep1n trader, a laptop, and an internet connection, and you are good to go. So that takes us to the next point: short selling without an optics. Short selling without an optics. Short selling without an optics is actually talking about that in any prevailing condition that you can buy and sell in the forex market, whether the market is trending up or whether the market is trending down or whether the market is ranging. It all depends on the type of trader you are. You could be a scalper that enters into the market and just buy and get out of the market. You could be a swing trader that his or her trade can last for a couple of hours or days. You can be a position trader whose trades can last for weeks and months. So it all depends on the style of trader you are. There is always what? An opportunity to buy, an opportunity to sell. Somebody is there to buy from you, your other side. When you are buying, somebody is selling. So there's no wasting time. Unlike the offline market, where rainy season or dry season might affect your business. Accessibility, bad road network will affect your business. Theft, criminals are there to affect your business. But in the forex market, we have no such things. Your location of business will also what affect your business. So you see the importance of what becoming a trader in the forex market is enormous. It's enormous. That takes us to what? Volatility. Volatility is the frequency by which the currency changes hands from the buyers to the seller. The frequency or the degree at which currencies changes hands from the buyer to the seller. The forex market is a highly liquid market, one of the biggest markets in the world with daily turnover of about $5 trillion. So you can see that this market is liquid. It is what a very liquid market. In every point in time, there is transactions going on. The market opens on Sunday by 11 p.m. GMT and closes on Friday by 11 p.m. GMT. But even at that, some transactions are still going on, even when the market is still closed. That's why sometimes when the market open on Friday, you see market gaps in your chart. But we get there because you guys are still new. We get there, you get to that level. So that's that for volatility. Accessibility. Thank God to technology. With the help of internet, your skill set, and a good broker like Trader, you do not need any hassle or you will not experience any difficulty. You can access this market even you are on the moon. In as much as you have the skill set, your laptop, and the internet, and a good broker, you can trade in the moon. Yes, I'm telling you, you can trade in the moon. That's true. You can trade in the moon. You can trade anywhere in the world in as much they have internet connection. Unlike your offline business, if you want to move your business from Abuja to Lagos, you know what it will cost you. It will cost you a whole lot. A whole lot. But the forex market is accessible anywhere in the world. You can trade in your bedroom. You can trade in your kitchen. You can trade in your smartphone. You can trade in anywhere, whether you're in Nigeria, you are in US, you're in London, you can trade anywhere in as much as you have what? The skill sets, your laptop, and a very good internet, and a perfect broker like my broker, Ep1n2. So that's it. So that takes us to technology. And when we're talking about technology, we're also talking about what the devices we use to access the market. Thank God to brokers that actually make it seamless for retail traders to access the same liquidity as the big banks by designing the MT4 and MT5 platforms for traders to be able to do what? To carry out their buying and selling transactions through their trading strategies. So if you have a good laptop and a good smartphone, you can access the same liquidity as the big banks. Possibilities and opportunities that are in the forex market. As a trader that is experienced and have the knowledge, you could possibly become what? An instructor. An instructor, yes, you can teach others on how to navigate the market profitably. You can also become a fund manager. You manage funds for people. You manage funds for companies. You can also be an affiliate. to brokers or a partner to brokers. Yes, you'll be paid for the amount of students you introduce to do what? To open an account with brokers. You'll be paid for it. So you can partner with brokers, just like Ep1n Trader, you can partner with them for their own words. For their own shares or payments. So that's so many major streams you can. Or you can even as well do what? Manage your own funds by yourself. You know that there's a saying that said that nobody can manage your funds, your money like you. So if you have the knowledge and the skill set, you can be your own fund manager. You can manage your account by yourself. You can teach, you can manage your account, you can manage your account for others. You can be also what? A partner with other company. You can be what? A copy trader. You can, when I'm talking about copy trading, it's a system whereby you as the master trader, you'll be trading for people that doesn't have the knowledge or may not have time to trade or manage their own portfolio. By so doing, you're making money, and the broker you're housing your money with will be paying you some what? Commissions or amount. So these are what? Endless possibilities and opportunities that are what? In the Forex market. Regulations. The Forex market is what? Regulated. Is a well-regulated market. We have the ASIC, the Australian Security Commission. We have our own Nigerian SEC, Security Exchange Commission of Nigeria, and so many of them. So the market is what? Regulated. That's why if you are making a choice of broker, you should make sure that the broker you are using is what? A regulated broker. So the market is not just left out there in the hand of anybody. It is regulated by the governing bodies in this nation. Just like we have CISEC, Cyprus Exchange Commission, and we have ASIC, Australian Security Exchange Commission. These are bodies that are responsible for what? Regulating the Forex market to suit retail traders alike. So that takes us to the final one, which says can be traded anywhere. It's just the same thing as accessibility. With your knowledge in the Forex market and your laptop, your internet provision, and a funded account with any trader of your choice, but I will recommend Ep1n Trader for you. They're one of the best in Nigeria. So with that, you can do a trade from anywhere. You can trade the market from what? Anywhere. Whether you're in the north, whether you're in the south, whether you're in the east, whether you're in the west, you can participate in the Forex market. So let's proceed to the next slide. So we have what we call the major and the minor market participants. Major and minor market participants. Those who make the prices move in the Forex market are the Forex market major participants. These guys trade volumes. They are the interbanks. They are the one that actually determines what? The exchange rates and the swap fee. The major participants of the Forex market are what? Banks of the world. Banks of the world, whether commercial or what? Central ones. Example of some of them are what? The Fed, the Federal Reserve, we have the Bank of Japan, we have the Bank of Canada, we have ECB, European Central Bank. These are examples of what big banks that actually control the forex market. They are known as major participants. They are the ones that actually move the price of the market pairs that we trade. Let's say you're trading Euro USD. The market price will never be static. It fluctuates based on what? The principle of demand and supply. So the major market participants are the one that does what? Causes that fluctuation. So however, large corporations that are engaged in foreign economic activity, investment, and hedge funds, brokerage firms also influence what? The price of the market. So you can see that the major participants, like what? Corporations, big conglomerates, foreign economic activities, like one company or one big company like Amazon is going to China to buy parts, or let's say big company like what company is very big? Okay, like the Apple, Mac. Big companies like the Amazon, if they want to buy their goods in China, they will have to do what? Make transactions, change dollar to what? To yuan. By so doing, fluctuating those two pairs in their price. Their price will never be static because of those injections of high volumes. So these are what the major market participants explaining. Let's go to the next slide. So we talked about the major market participants. Now we also have what the minor market participants. The minor market participants are what the small boys. The ones we talked about before are the big boys that control the market price. The retail traders are the small boys, the people that doesn't have much capitals on them. People like you and I, we are known as what? The retail traders. We do not have volumes compared to these banks, either the commercial or the interbanks. We, the traders or the retail traders, are the speculators out there that does what? Participate in the forex market with a couple of $1,000 and above. So individuals from every part of the world that trade the forex market in a small scale level in order to make profits are known as what? Retail traders. So that's it. Let's take us to the next slide. What is traded in the forex market? What is traded in the forex market? We trade money, we trade currencies. Yes, we trade currency. So we trade currency in the forex market. We have currency pairs that are traded in the forex market. You can see we have the major currency pairs. But before I start with major currency pairs, let's talk about what the types of currency we have. We have the major currency and what? The minor currency. We have the major currency and what? The minor currency and what? The exotic currency. The major currency are the most liquid currencies in the world. Are the what? The most liquid currencies in the world. That is, their demands are high. And they are the currencies of what? Advanced nations, advanced countries of the world. An example is what? The US dollars. Another example is what? The Great British pounds, the Japanese yen, the Australian dollar, the New Zealand dollar, the Swiss francs, and so many more of them. These are known as what? The major currency. Why the minor currencies are those currencies that are not highly in demand. They are what? Not highly in demand. They could be currencies of what? Developing nations of the world. Yes, the currency of what? Developing nations of the world. We could have our naira, we have the Zimbabwe dollar, and we could have the South African rand. These are known as what? Minor currencies. So that takes us to what? Types of currency pairs. Types of currency pairs. We have major currency pairs. We have minor currency pairs. We have exotic currency pairs. We have the spot metals. We have the indices. We have the what? The commodities. So when we are talking about the major currency pair, it includes all US dollar pairs. When you marry the 7 remaining major currencies, when you pair them up with the US dollars, they are known as what? The major currency pairs. I told you that we have major currencies. We have what? The euro, the Great British pounds, the Australian dollar, the New Zealand dollar, the Swiss franc, and what? Anyway, based on the ones I have, actually, the Canadian dollar, yes, we have the Canadian dollar, and what? The Japanese yen, which are what? The 7. Then we have the USD, which is the Baba itself. So when you cross the US dollar, or when you pair them or marry them together as a couple or pairs, we have what? The major currencies. So an example is what? The Euro USD, the Great British Pounds USD, the NZD USD, the USD JPY, the AUD USD. These are an example of what? The major currency pairs. And that takes us to what? The minor currency pairs. The minor currency pairs are, or is when you exclude the US dollar but pair other currencies with what? Great British Pounds, Euro, JPY, pairs. When you pair up these 3 major currencies together, excluding what? The US dollars, you will have what? Minor currency pairs. An example is what? The Great British Pounds AUD, the Great British Pounds JPY, AUD JPY, NZD card, AUD card. All these examples are known as what? The minor currency pairs. That takes us to what? Exotic currencies. Exotic currency are what? The currency of what? Underdeveloped countries. They are known as illiquid currencies. Illiquid currencies because their demands are so low. Their demands are so low. So that is the reason why their spreads are always high. So that's a way of for them to be able to meet up. They can actually catch up or meet up by the reason of their wide spread that they have. Because they have low demands. So an example is what SEK, Sweden krone, the South African ZAR, and the Singapore dollar, the Norwegian krone, and the Chinese yuan. So we also have the spot metals. We trade gold and silver in the forex market. Yes, they are known as spot metals. So we trade them. You can trade gold and silver in the forex market. Indices are also traded in the forex market. When you see AUS200, it simply means 200 top companies in Australia. Yes, the stock of 200 top companies in Australia. If you see Japanese 225, it simply means what? 225 top stock companies in Japan. US 30 simply means the same thing. US 500 simply means the 5 performing or top stock companies of what? United States. And merged together. So they are known as what? Indices. Commodities are also traded in the forex market. You have the crude oil, the nat gas, and the Brent oil are traded in the forex market. So these are the things or the pairs that are traded what in the forex market. You can see that this market is large, is big, is for everyone that has the knowledge and the interest. So do not look back. Start now to what? Acquire the knowledge. So that takes us to the next slide. Some example of what are traded in the forex market. Some example of what are traded in the forex market. We have the 8 major currencies, just like what I named before. We have the US dollar, we have the euro, we have the Great British Pounds, we have the NZD, the New Zealand dollar, we have the AU, the Australian dollar, the Swiss francs, Japanese yen, and the Canadian dollars. These are the 8 major currencies in the world. And I told you that these are what the currencies of what advanced countries, bubbling countries that have good economies. And because of their currencies are in high demand, that's why they take the position of what major currencies of the world. So major currency pairs are currencies that involves USD. Example, we have the USD, JPY, Euro, USD. It's just like a repetition of what I have actually said before. Now the minor currencies pair, they are currencies that involve all other major currencies apart from what the USD. Example is what the Euro, Great British Pounds, AUD, JPY, NZD card, etc. So notice pairs are currencies that involve one of the major currencies. Okay, exotic pairs are currency that involve one of the major currencies and another currency outside what the 8 major currencies. Example is what USD, Singapore dollar is an example of what exotic currency pair. So exotic currency pair are currencies that involve one of the major currencies like the dollar, the euro, the Great British Pounds, paired up together with those currencies I told you that has illiquid. When you pair them up together with the major currency, they become what exotic pair or exotic currency pairs. I believe that is well understood. Please, if you have your questions, you can ask me. But in the absence of that, we should continue. Then we have what the basic and the quote currencies. The basic and the quote currencies. A currency pair is the quotation and pricing structure of the currencies traded in the forex market. The value of a currency is a rate and is determined by its comparison to another currency. The first listed currency of a currency pair is called the base currency. And the second currency is called what? The quote currency. So that is, you can see here we have the word Euro USD. Euro is known as what? The base currency. And US dollar is known as what? The quote currency. So the first listed currency of a currency, or the currency that is at the left-hand side, depending on how you are facing, is known as what? The base currency. Or let us put it this way, the first currency in a currency pair is known as the base currency, while the second currency is known as what? The quote currency. So the first listed currency of a currency pair is called the base currency, and the second currency is called the quote currency. So like as we have the quotation, Euro USD is what? 1.2500. Simply means that 1 euro is exchanged for 1.2500 US dollars. Just like I told you when I was giving instances of somebody that wants to exchange naira to dollar, the stipulated price for the black market is what? $1 to what? 750 naira. $1 to what? 750 naira. So in other words, you are pairing naira and dollar together. So that's what this one actually what signifies. The present rate, when you check your chart, you will see something like this, Euro USD. You see the chart calibration saying that 1.2500. That simply means that what? 1 euro. You need 1 euro to be able to what? To get $1.25. You need what? 1 euro to be able to what? Obtain $1.25. I believe it's well understood. Do you have any question? I hope it's perfectly clear. All right, in the absence of that, let's proceed to the next slide. So this is a diagram of a base and a quote currency. Like what we stated in the former slide. You can see the first currency that is in a cycle of green is known as what? The base currency. Why the currency that is cycled in orange color is known as what? The quote currency. Then the rate at which they paired off together, or the current rate as at the time of this slide is what? 1.400. Simply means that 1 euro is needed to be able to buy or have $1.40. So that the value of 1 unit of base currency into quote currency, that is 1 euro, is equivalent to 1.4 USD. This is well understood. So let's take us to the next slide. Forex sections. Forex sections. We have different types of sections in the forex market. For day traders, the most productive hours are between the opening of the London market at 8 GMT and the closing of the US market at what? 22 GMT. That is, the market in our own country opens by what? Approximately 9 o'clock. 9 a.m. is known as what? The London section. Then we have what? The New York section, which opens around 1:30 Nigerian time. So if the London opens by 8 a.m., that simply means that is when London businesses, UK business, and every country in London and all those businesses will start opening up by 8 or 9 a.m. in the morning Nigerian time. Till the market will be open till what? 10 o'clock our time. But in that same period, the US dollar will do what? We open as well by what? 1:30 Nigerian time, 1:30 p.m. Nigerian time. And when these markets overlap each other, there's what? A high impact of what? Volume. High volume of transactions are made in this period. And that period of overlap is between what? 1 p.m. GMT to what? 4 p.m. GMT. So you can see that those two sections are overlapping themselves. The London and the New York sessions are what? They do overlap themselves during 1 p.m. and 4 p.m. So there's high volatility in the market in this period. So the main session of the day are what? The London, US, and what? Asian markets. The Asian markets normally take place from anything from 10 p.m. We have the Australia, which are known as what? The down under. Their market opens around 10 p.m. Nigerian time. That's when they will start what? Experiencing their own morning. Business will start what? Opening up. Then China also start their own day business on 12 a.m. our own Nigerian time here to close around what? 8 a.m. So below is a brief overview of trading sessions that will help you make the most of the market. While the London sessions, it opened between 9 a.m. depend on the daylight savings. So London sessions open between 9 to 8 a.m. GMT and winds down around what? 5 p.m. GMT. Then the currencies that you are to trade are what? Euro, Great British Pounds, and what? USD are the most active currency at this time. This very period are what? The most active currencies that you are to trade in this period are what? The Euro, Great British Pounds, and what? The US dollars. So we have the US section. It opens around what? 1 p.m. GMT and closes around 10 p.m. GMT. The market, the forex market doesn't close. It's a 24 hours market. So, but the reason why they are stating these times are what? Anything from 10 o'clock, the market, the liquidity of the market will start winding down because businesses will start closing for the day. Yes. So it depends on the kind of trader you are. If you want to trade in the morning time, if you're the one that like trading in the morning, you should be looking out for London section currency pairs like the Euro USD, the Great British Pounds USD are the best currencies you can trade in the London section. Likewise, in the New York sections, you should be trading currencies like US dollars, Euro, and Great British Pounds because US dollar is more active in this period. And because it is paired with other currencies, it will have upper hand than other currencies because the New York or the US, American, they are opening their business around 1 p.m. or 1:30 p.m. So it is expected of you to go for what currency pairs that are what liquid at that moment. Then what are the Asian sections? Asian sections opens up about 10 p.m. GMT on Sunday. On Sunday, it opens on Sunday when the market has closed. Yes, that is the first section that ushers us into the market, the Asian section. It goes into the European trading section at about 9 a.m. GMT. Not very suitable for day traders. Yes, Asian sections is not really suitable for what day traders. But in this market, it all depends on your style of trading. No limitation at all. Whatsoever that is comfortable with you, whatsoever that works best with you is fine. So that's it. So that takes us towards the introductory parts of the software we use to navigate the markets. This is introduction to brokerage and what trading platforms. So let's say when you have the experience, the knowledge about the forex market, you have your laptop, and then you have like $1,000 to invest. You definitely need what? A platform to sign up with a platform. And your broker, which is like 10 Trader, will provide you what? Their MT4 or MT5 platform, where you can what? Sign up with. This is a software that facilitates you to do what? To trade and make your analysis, to trade the forex market. So we have what? The MetaTrader 4 and MetaTrader 5. MetaTrader 5 is a software that is owned by MetaQuotes Incorporated. It is the application that is used to navigate the forex market. All brokers have their own MetaTraders. Yes, you can see the mobile version by the right side and the system version, PC version by the left side. These are a piece of software that your broker will do what? Will provide for you to be able to what? Buy and sell in the forex market. If you are new in it, you can see that this thing will be looking very confusing to you because you don't know what it is. We all were like that before. So these softwares actually facilitate you to do what? To navigate the forex market, to carry out your analysis, to buy and sell in the forex market. So every broker that you are going to bank with have these softwares at your disposal. Immediately you register with them and fund your account, you'll be provided this. It's a necessity. So we cannot do without it. I think as we proceed, then I'll start showing you the different components, how to use the different tools in the MT4 and MT5. So some functions in the trading platforms. This takes us to some functions in the trading platforms. We have the instant execution, the pending orders, and flexible modification, trailing stop, and break-even functions, navigators, terminals, market watch, trading tools, trading time frames, and we have the auto trading systems like the EA, the expert advisors, the percentage account money manager, the multiple account money manager systems. These are softwares or pieces of softwares that actually help you to manage volumes or a lot of funds. But the instant executions are functions that are in the MT4. Maybe when as we actually talk, I would like to show you these stuffs in an MT4 or MT5. So I think that this is where we are going to draw down the section. I would continue this class where we stopped, which is some functions in trading platform. So please go home and do revise or revisit all these aspects that we have talked about. I will kind of send you guys the slide for your own perusing. Thank you very much and have a wonderful day.